This is Alan Bush with ADMIS with the Daily Financial Forecast for Tuesday, May 24th. Starting out with the stock index futures, we did see gains in the overnight trade, and it did look like futures were overperforming the news. With crude oil firming, stock indices did much better than the small gains in crude oil would suggest. And lo and behold, we did see a very bullish new home sales report coming out at 9 o'clock. In fact, new home sales showing the largest rate gain in 8 years. So stock index futures, good gains in the overnight trade and extending those gains with that 9 o'clock new home sales report. Longer term, we feel that stock indices will continue to advance. Still thinking we can see some new highs for the year in all of the major indices. Now, moving over to the currencies, the dollar index also continuing to advance. Yesterday, we did have some additional comments from another Fed official talking about the possibility of 2 to 3 rate increases from the Fed this year. Also, we did see some additional gains with the new home sales report coming in as strong as it did. But we are starting to think that after several weeks of higher prices in the dollar index, that the strength may be running its course now. There may not be that much left to the upside. Of course, we do have Yellen scheduled to speak on Friday, and I think there may be one more move up with her comments that I believe may be a bit on the hawkish side, which would be in keeping with what we have seen from other Fed officials over the last 3 weeks. So steady higher over the near term for the dollar, possibly some temporary top developing with Yellen's speech on Friday. Seeing the euro currency under some pressure after a German investor confidence report coming in on the weak side. Gains in the pound after a new poll showing the stay vote gaining some traction. However, this was after 3 days of lower prices for the pound. Also, gains in the pound are likely to be limited by evidence that the UK economy is showing signs of slowing, and the Australian dollar under some pressure after comments from the Reserve Bank of Australia indicating that they could possibly be more accommodative down the road at one or more of their central bank policy meetings. Interest rate markets under some pressure, mainly due to the new home sales report coming in as strong as it did. Also, the hawkish commentary from so many Fed officials over the last 3 weeks, also a negative on the interest rate futures markets. Even though the Fed is talking up the possibility of rate increases this year, the probability of a June increase is still at just 30% and at 79% for the December meeting. And in the gold and silver, these two precious metals under pressure, primarily due to these hawkish Fed comments and dollar strength. However, I'm thinking we may find a bottom right around the end of the week when Janet Yellen gives her talk. I think that will be the low for the move. I think any weakness in response to what Janet Yellen has to say, I think should be viewed as a buying opportunity for the gold and silver. The long-term chart objective to the upside in gold, I have calculated above 1,400. In fact, it comes in at about 1,457. So we may see that next year, but by no means have we topped out in the precious metals. The long-term trend is still higher. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.